All right, welcome back. You're with us here on the market, and we're now joined by a special guest. Siddharth Parekh is joining us in studios today, senior partner and co-founder at Paragon Partners. And this is, in fact, Siddharth's first time on television, so we're very pleased it's with us, Siddharth.
Thank you. Great to be here.
So, there's been so much buzz in the space lately, and we've actually been tracking that despite whatever we're seeing on the macro front and with equity markets, the VC space has been completely ripe with investment buzz and deal action. You're in fact looking to now raise your second fund, so which is, again, validation of the fact. So talk to us about what you're observing, how much activity there is, where the confidence is coming from, what kind of activity you're seeing.
Yeah, sure. So, I think that there is a lot of dry capital today. So investors have raised a lot of new money recently. And generally, we think in times of uncertainty, there are lots of interesting opportunities from a valuation standpoint as well. So we do see a lot of deal flow. We do see a lot of dry powder from PE investors and VC investors. And generally speaking, as long-term investors, investing in a period of sort of downturn is usually a good thing to do, given where valuations are, and there has been a moderation in prices and in the market, as you know. So we think it's a good time. We think there is a lot of deal activity because businesses are looking for capital. The debt markets are challenged today, so access to leverage is quite difficult. So most businesses that are sort of high growth businesses need equity capital to continue on their growth plans. So there is a lot of deal flow and activity.
Yeah, and that's exactly the point that I wanted to understand, that given that equity markets are not really the go-to favored destination right now, are you finding that lumpy money find its way into funds such as yours?
Well, no, I think investors are fairly mature. LPs are very mature when it comes to investing in India. They've had a track record of over 2 decades now. The industry itself has matured. So you've seen funds have seen over 2 cycles now and have become more mature in terms of how they invest, and there's a lot more discipline in the system. So investors who are bullish on India and who consider India as a sort of long-term favorable destination are continuing to look at investing in funds. And there are various strategies, right? So today, there's not just one strategy, which is PE or VC.
Sure.
There's structured credit, there's real estate, there's obviously pipes. So when the stock markets have corrected, pipe opportunities are obviously fairly attractive today. So there's a good variety of investment options for LPs coming into India, as long as they believe in the long-term fundamentals. So I think it is sticky money, and I think people will continue to look to invest in India because, frankly, if you look globally, there's very few attractive destinations given the global slowdown and what's happening everywhere else. So a 6% GDP growth is still quite attractive.
Definitely.
Sure.
So I'm going to ask you a big question then, which is, where is the action heating up, right? Which segments? Financial services, are we seeing it tapering off or not? Because fintech could still remain hot. You've actually had a big investment in Capacite Infra, where I think you've finally lowered stake, perhaps. That's one that caught our eye. And consumption or retail seems to be a huge one for you as well, that segment. Where are you seeing deal activity?
Yeah, so we're bullish on many sectors. The way we've identified some of the themes are around consumption growth. And that includes consumer retail, financial services, even manufacturing and infrastructure services, and healthcare. And we have investments in most of these areas. So consumer accounts for at least 50% of our portfolio, and that includes segments like apparel and footwear, consumer brands, food and beverage, and fashion. So just given penetration levels and where consumption growth will continue to be. We're very excited about investing in domestic brands.
What's the big trend that you foresee for consumption? And I'll tell you why, because again, we were cribbing about the economic slowdown. Paints as a segment does not seem to be seeing that slowdown. Unilever came out with its earnings just yesterday. I'm sorry, I'm giving you inference of just the listed universe. Unilever came out with its numbers yesterday. They said that the near-term outlook it's looking a little grey. They've talked about a slowdown in the rural segment. When you talk about fashion, for instance, sort of high-end fashion or mid-level fashion, a trend, for instance, popularly known as Zara or a West Side on the other side, they continue to post very stellar numbers. So where do you see slowdown, A, and where do you see the next big trend of growth coming within consumption?
Yeah, so I think the slowdown is temporary. I think it's a near-term issue. I think you have seen volumes contract for the large FMCG companies, probably driven by slower rural growth. But in my view, as a long-term investor, if you look at a 5-7 year time horizon, each of these segments have huge growth ahead, just given current penetrations and the propensity to spend and consume in India. So
within the already listed space, or do you think there will be newer players who will come in and eat into the market share that these guys enjoy?
Yeah, I'm a firm believer that new brands, startup brands that are disrupting the market, whether it's through technology or being more omni-channel present, are going to continue to grow. And the younger population, these new brands are really understanding what the population wants and needs.
You were just
Catering to
giving us
that.
an example of Chai Point, which I love because you said they're turning profitable, and that's the golden word when it comes to the startup space and all this, the naysayers that keep talking about how too many companies are just pumping in for money for growth. That's a great story to hear.
Yeah, so Chai Point has an omni-channel model. So they are the largest tea retailer in the country today. They have 150 stores. And what we saw was at the operating level, they were already profitable. Today, they will turn profitable at the EBITDA level as well. But it has two businesses. One is the retail store business, and the second is a more corporate institutional business, which is tea dispensers. Both businesses are highly profitable at the operating level. So, we invested in that business with a clear, sustainable model and a path to profitability. And, they are a high growth company. They're growing 75% year on year. But the focus of the management team is clearly on the bottom line and the sustainability of the business model.
So Siddharth, clearly you've got a big focus when it comes to this pocket of the market, and there's a clear synergy there with the India growth story and the consumption story. In some of the other pockets that you're looking at for investment opportunities, whether it be infra, finance, industrials, are there any challenges in those pockets, whether it be finding the right startup, regulations, overall economic sentiment?
So financial services is a big focus for us as well. We've made a couple of investments in NBFCs. We continue to look at that space. We think, again, penetration levels are very low. We particularly like the SME lending space and the consumer lending space. There's a huge supply-demand gap in terms of capital required by SMEs today. And those segments of the market continue to grow. So there's no demand issue. The challenge in the financial sector today is obviously a supply of capital, and largely on the banking side. So the sector has been choked of capital recently. We think NBFCs that have access to debt capital and are growing cautiously in the right segments will continue to attract capital from investors. So, we are looking at some of those businesses. The corporate lending segment is much more challenged today, whether it's real estate or whether it's heavy industry. So lenders in the corporate side are going through some pain. And I think there's still some more pain to come. So you have to be cautious about that space. But we still think long term, NBFCs as a business model will continue to flourish. They provide a very important service in terms of financial inclusion where the banking sector can't play. So that's really a space we like and we'll continue to look at.
In just one word, we're completely running out of time. Where is the next big alpha generation in the next 5 years? Is it going to come in from the financial space, inclusion or what have you, or penetration, or would it be consumption?
I think consumption is that one word because it encapsulates everything. It encapsulates the need for financial services, the need for consumer goods and brands, the need for infrastructure and the back end to fulfill that demand, and the need for infrastructure. So logistics is a massive investment opportunity, very early days in terms of making sure last mile connectivity is there. So I think infrastructure support services is going to be critical for the consumption growth.
B2B logistics. Because B2C did not really play out.
Yeah, B2B, but when I talk about logistics, it's supply chain, it's services or software, it's automation for the logistics industry. So I think all those areas will be very critical.
Between 2020 and 2022, we've got a whole spate of the bigger startups, almost unicorns, starting to slate their IPOs. How viable do you think that is? Do you think we're going to start to see some mega exits coming in over the next couple of years?
I hope there will be exits for the VC community. I think that will be a very good signal for investors. I am not sure about the IPOs. I think public market investors, as we've seen globally, are smart and are looking to back sustainable businesses that are profitable, that are not just capital guzzlers. So I think business models do have to evolve into delivering return on investment to investors. So I think there will be some selective IPOs, but I think we're still early on in that.
Okay, great having you in the studio,
Thank you.
Siddharth. Thank you so much for taking the time out and speaking with us.